Hello traders, Jason here from swinghigh.com for your halftime report. It is Friday the 13th and stocks are higher right now despite worse than expected economic reports. International trade came in this morning much worse than expected. Consumer sentiment was also worse than expected. And not sure how nat gas was. Okay. So that was showing a slight slowing in nat gas storage, meaning inventories are decreasing, which is good for prices. So that's the economic news, but despite that, which should have sent the markets lower, and it did at one point, we are up right now. Let's talk about the market internals real quick, or let's compare all the markets. SPY up 0.64%, the NASDAQ up 0.73%, the diamonds up 0.83%, the Russells only up 0.3%, and the financials barely up 0.07%. So some real relative weakness in the financials and Russells once again. They are going to be leading us lower, it seems, so watch out for them. The tick is mostly positive today. The trend was not corroborating the early sell-off we saw in SPY. As we can see, we opened a slight gap up in SPY and then sold off on the economic news, but the trend did not follow that at all. In fact, it opened very bearish and just plummeted below the one line, or the neutral line, and right now we're just hanging out in bearish territory. I mean bullish, excuse me. We are in bullish territory on the trend. The VIX bleeding out nicely today. Also didn't really corroborate today's move. But right now it is bleeding out nicely, giving the bulls some room to move. So the market internals are behaving bullishly for the most part, and we'll see what happens there. The reason the markets are up despite the economic news is mostly attributed to better than expected earnings, corporate profits. So that's the news driving the markets. Let's look at some of the technicals. So we gapped up a little bit and then sold off on that news. Came down, broke out under the 109 area on very good volume, and it looked like it was going to be a great day to be short the market. But we found significant support for intraday action, at least at the 108.75 area, that mark, or 108.70, yeah, the low of yesterday. Basically at the end of the day we had a sell-off yesterday, and that low acted as big time support. We bounced off it twice, made a nice tweezers bottom, and then shot up. Now we are making a high base ascending triangle, not quite a bullish pennant or symmetrical triangle, so that is bullish, that formation there intraday. I don't expect us to break above 110, but if we do, I'm going to be exiting most of my shorts after hours today, and making sure that I'm not short going into Monday if we break above 110. If we stay below it, I will be more comfortable staying slightly short. Right now, it looks like we're breaking down a little bit. We'll see what happens there, as we are still in the context of this high base. I want to draw a couple things real quick. Fibonacci retracement on the sell-off. We just broke down below the 50% retracement, so that's a little more bearish than bullish. As long as we stay below that, that should be bearish. What else was there? I wanted to show you one other Fibonacci, but oh, the dollar. Okay, let's see if I can get this in here real quick. We have this. That's not what I wanted to show you. I'm gonna make another really brief video, 30 seconds, I promise.